Hello traders, welcome back to Your Nifty Guy. I hope all of you are doing well. So today was the monthly expiry. Let me know in the comments how was the monthly expiry experience for you. But then the way the candles formed, the way the ranges tightened and expanded, all of it left behind some very important clues. In this video, we are going to break down that entire expiry day price action, understand what the structure is signaling for the coming sessions, and then build a clear, clean, high probability trade plan for tomorrow. If you find this kind of structured price action based breakdown valuable, make sure you like the video, subscribe to the channel, and share it with fellow traders so that more people can trade with clarity rather than confusion. Now, let's jump straight into the charts and decode exactly what the market tried telling us today. Markets opened with a slight gap up, and then if you look at the price action, mostly the entire, I'll just quickly mark the first 5 minutes candle for you, right? Apart from this breakout on the upside, which failed, and around here and around this price action, the most of the day was actually spent inside the first 5 minutes candle, right? The first 5 minutes candle was a big and wide ranged candle. Now, we got a breakout of it, we got a breakout failure of it, and then as we had already planned yesterday, this entire zone was a no trading zone for us. One trade could have been taken had this particular move that came in, right? The breakout above the day's high. Now, this was not a significant breakout. That was the reason of looking to create a long entry around here. But then, yes, of course, around here, once the market came down here, if it would have given us a good enough pullback and formed a double top, we could have shorted the markets around here, but then the markets chose to fall down without giving us any significant or right pullback. Post that, market went into a higher high, higher low formation, but then in a very tight range, right? Why do I say it in the tight range? Because the previous swing high is here, the previous swing low is here, and without taking any of these out, so market was simply forming a higher high, higher low formation, and no clear price action was being formed in the formation. And today it was a no trading day for me. Although the expiry special move did happen, uh, but then again, I'm still a bit down under the weather. I have started taking antibiotics and I was feeling a bit drowsy after the afternoon dose, and I decided to like take the day off and not actually trade, but I was observing. So I'll quickly tell you what was my key observation and what was I looking at, right? So I drew this particular trend line from the bottom. This trend line was already coming in from the top. Around here, till around this time. So the OI, the open interest has clearly changed when the market was in this particular move, right? The PCR was in the bearish territory when we were around these levels, right? There was more call writing than put writing, but then as we slowly and steadily moved up around here, there was good amount of solid put writing also, which developed around these levels. Of course, 26,000, the round number figure, there was a good amount of call writing as well, right? So it was just a moment of observation about to see which side the market is going to sustain and which side is the market going to trap, right? So if the markets would have sustained above 26,000, right, it did sustain for quite some time, but then not a lot. And you could see that those people are not exiting, right? So it is not just the OI, but the change in OI as well, right? Because if those people are not exiting, that is, they are not squaring off their trades, the short covering move will not be coming in, right? So those people were not immediately exiting their trades, and that was the reason why uh, no short covering came even after market inched slowly and steadily around here. But then the fall which came in, right? So this is exactly so as this particular price action was being built, a lot of open interest added at the 26,000 round number levels, 25,950, 25,900. Significant put writing started accumulating at these levels, and then once the markets broke down below this particular uh, trend line, all the puts simply exploded, and all the people who would have written those put options were forced to exit their positions, leading to a good trade on the upside. Now, I did not trade this. My elder brother did take a hero zero trade, right, sitting right next to me in the office, and he made a good amount of decent profit today. I did not take because of the medication impact, as well as I was not too feeling well into the sync of it, so I decided to take the day off. So this was the simple hero zero expiry trade which played out. Let me know if you guys observed the same and if you guys traded it. I would love to know how was the expiry trade setup for you, even if you would have waited for a pullback, which of course came in quite a bit late, but then you could have still shorted the markets with a very small stop loss up around this, and you could have got a good trade, still a good move on the downside. I would not have traded this because this breakdown came in at 250. Post around that time, I do not initiate any fresh new trades. But then, of course, if anybody would have done that, would have made a good amount of money as well in scalps on the short side, right? Now, the thing to observe is, sorry, yeah, for tomorrow. Today, yesterday, we'll start with the daily time frame, right? So yesterday we got a candle which the high was lower than previous high, the low was lower than previous low, with a closing below previous low. Today's candle is continuing that trend. So in a way, we can say that yes, we have got a follow through. We are also we have also closed much below this particular trend line which was coming in, right? So what the point that or a scenario that we're considering that this might be a retest of these levels. So this is not actually a retest. We have actually gone down below it. So I think it is fair to treat this as a breakout failure as of now, right? So again, today we have the candle, which is the high is lower than previous high, the low is lower than previous low, as well as we have a closing, which is lower than previous low at all, right? So yeah, the reversal candles have formed, and with this on the daily time frames, our bias has shifted to a bearish bias, right? The weekly candle is still in the formation; it is still an inside bar, and okay, weekly time frame fib. This was the weekly time frame fib, which the weekly has the price has already taken a support from here, so we'll not be needing this. But then, of course, on a weekly time frame, since we are seeing the markets coming down, we can use this low with this high, right? So this is the weekly time frame new high which was made, and these levels will now be our weekly time frame fib, right? On a 15 minutes time frame for tomorrow, we don't need this. Of course, we don't need this, right? I'm deleting this trend line as well. Okay. So yeah, whether it is still today's price action was still just a expiry move, the way to long trap the people who had logged the markets, or is it going to be something superficial? We'll be finding it out tomorrow itself. Uh, but then for tomorrow, we'll keep the plan of action very, very simple. Number one, I will be on the lookout for the trap setup at the open, right? If we get a good closing on below today's low at around the start of the day, and then the high of that candle gets taken out, that will be a long scalp trade that I will be looking at. So this is based on a setup wherein people who would have missed out on this particular fall, out of FOMO, they would be entering into fresh shorts as soon as the low is taken out. And when the high of that candle gets taken out, means that the stop loss of all those people who would have entered into fresh shorts would be triggered, leading to a move on the upside, which we can capitalize, right? We'll try to capitalize that. Needless to say, below this, we are absolutely short. We are also approaching this weekly time frame support around here, so we'll be a bit careful. Any positive price action around here can be used to take a long entry, right? Sorry, I need the fib again. Now, this is with regards to this high and this low. In case if this low breaks tomorrow morning, then we'll need to adjust the fib levels accordingly. As of now, this is the fib level that I am absolutely interested in for tomorrow's price action. In case of any gap up and any negative price action around these levels, I will be looking to create a short entry. Any long trade apart from this short scalp, I will wait for markets to give me a closing above this particular high with a pullback. Only then will I be interested to take a long trade, right? So the tide seems to have turned for now. We'll observe and we'll see what it is for tomorrow and how does the markets unfold. So yeah, that wraps up today's breakdown, traders. Monthly expiry has done its job. It has revealed the intention, and now it's our responsibility to stay aligned with the structure, not the noise. Trade with clarity, manage your risk, and remember, consistency is built one disciplined day at a time. I'll see you in tomorrow's video with fresh insights. Until then, stay sharp and stay prepared. Cheers, and thanks for tuning in.